Ira Epstein with your Agriculture Wrap-Up for this Monday, April 27, 2020, about 2:15 in the afternoon Central Time. Stock market update, but that's the euphoric move. We should expect that. I was, because we've opened up parts of Europe, be it Spain, Italy, France. They're working at, if you will, Notre Dame right now, getting that ready for construction again. So things are getting back to some semblance of normal. In the United States, we have 4 or 5 states that started reopening over the weekend. Some restaurants will actually start opening today, and by next weekend another group will join in. So we're getting that semblance that we're trying to get back to some form of normal. Well, that should be friendly to the market, and it is right now. But when we come to the grain market, the question is who's buying our grain? Where's the demand for it? And you're not seeing it. And across the board, you're in the red at this point in time. Corn down another 10 cents. In part, energy prices just getting smacked around. In USO, the popular ETF, the 5th change in 2 weeks by the directors of this. They come out today and they tell via SEC filings that they're going to dump all their current June contracts over the next 4 days and roll and go into a ratio between July on out to next June. I've been trading futures a long time. When you tell somebody what you're going to do in the market in a 4-day period, do you think the bids are showing up to get those products when we have oversupply and we don't even know where to put everything? And away you go, down 25% today. When I look at soybeans on a weekly chart, you can see we're down another 3 cents. We're into the 829 level. When I look at the daily bar chart, the one thing I can see is that we seem to be temporarily caught between this break that we had last week when we got under 820, snapped back into the mid 850s, and now we're sort of stuck in that area. When I look at swing lines, I see a pattern of lower highs, but I can also argue with today's action, I do have a pattern of a higher low. Now, what rules the day is the lower highs, because they're the legacy. They've been in place longer than this new pattern. To reinstate the bearishness, you need to get under 834. Let's assume that doesn't happen. What if you just went up and took out 856 3/4? You would have a pattern of higher lows, higher highs. Where are the moving averages so I get an semblance of resistance points or neutral points, something? I look right here, 852.5. I consider the 18-day average of closes the line in the sand. So as it moves, markets that are under it have a bearish bias, over it a bullish bias. When you're under it, that's a resistance point. There's no magic. It doesn't have to go back to it, but you'll see more times than not, it's an important point in the market. If we take out 834.5, the question is what is under the market at that point? And if we stay over and get over that 856 3/4, the question is what's left to the upside in the market? Well, to get to that 856 3/4, you got to clear the 18-day average of closes. That will not be easy. It can happen. And if you closed over, if you got first over 8 to hit 857 and managed to close over 852.5, it would be a bullish scenario. Be the first to say it. Take out 834, and I don't see an awful lot to the downside because the Bollinger Bands are right there. Now, what Bollinger Bands do is they act many times as a brake on a market. Now, what do I mean by that? When you get a market that's really breaking hard, they don't get far away from it because 95% of the time, the algorithm, you will see the lower band, you will not close under it, or the upper band over it. That is what the algorithm does. It bends to the market volatility and price, 2 elements in there. So getting down there, I'm looking for short covering at the 830.5 zone. Momentum-wise, the market's just sort of hanging here with readings just above 30. Any number under 30 is oversold. So I think that if you clear that 834, I expect the pros to be fairly aggressive in taking some money off the table. Not going long, just taking money off the table to see what the market wants to do next. In the meal market, we've really developed a sideways pattern. Now, from that, we still have the pattern of lower highs, but I can make the argument of higher lows. And when you get that, you start going sideways. Everything reinstates bearish if you take out 290.30, or does it? Not necessarily. Why? you're already in a condition of being oversold. And the market is not trying to get that red line back under 20 to embed. So, downside, yeah, you can get to 285.80, but it's going to be a real workout to do that. If you rally from here over 294.70, you can go up to the 18-day average and fight a battle, and any close over 297 is short-term friendly. Soy oil, I expect that on breaks to the Bollinger Band, it's going to hold. And that seems to be what it's doing. It is very oversold in a downtrend. This area right here was the first challenge of the Bollinger Band. That's where I think the pros took some money off the table. If they went short on this rally, again, I think they took some money off on Friday. Then we get to the corn market. Now, if I take this off right here, this is last week's action. You have lower highs, lower lows. Get back to the lower Bollinger Band. I'll look for some support there. Oversold market? Absolutely. So, as bearish as we might be talking on this, I want to see the market give me an opportunity to sell either with an embedded reading or out of an oversold condition if I'm a bear. As a bull, why? That's what I'm going to ask you. Why are you bullish? So I'm not seeing that here. In the wheat market, news that Russia was not going to export any further wheat didn't do anything for this market. We had this one swoop up on it, and it just let go. And this market's back in its bear trend, oversold under the Bollinger Band. So I'd expect next day or so it gets back over that band or tries to. But is there an edge here in going short in an oversold market into a Bollinger Band? There is not. What about resistance? Pretty formidable, 543.5, 546.25. Sugar market, is this a breakout again from somewhat sideways action? I really can't label it sideways. This is just a market that is going down, down, down because nobody wants ethanol products. That is the dilemma. What else do you do with the sugar? We've been taught not to eat a lot of sugar. So away you go, and that's what it's fighting, and that is the problem for that market. Coffee still very much in a bear market. This morning, if you had my morning subscriber video, I was telling traders, watch out. You might be headed back into this 100 level. I certainly would not recommend being short under a Bollinger Band, but I am in the bear camp in the market. And what if you embed? So today we had both numbers of the slow stochastic under 20. They were yesterday, let's see if I can get this to do that for me. Yeah, there we go. So on Friday, both were under 20, not Thursday. So if tomorrow, even on a rally, both numbers end up under 20, and it's going to take a big rally to not make that happen, they'll embed, and I think the pros will all turn their focus back to the bear side of this market. In the cattle market, we had a friendly cattle on feed report. All it really did is lift the market to the 18-day average of closes, and it didn't go anywhere. This is a very poor performance day. You would have thought with that report, maybe you can get over the last rally high of 85.25. You stopped right at the 18-day average, and that becomes a bit problematic for this market. I don't know. 84.07.5, we'll call it's the 18-day average, closed 84.05. I think the bears are still in control until 85.25 is taken out, and wherever this Bollinger Band comes in, that'll be their support target. In the hog market, I like this rally. This is one that you can see the market is painful for the bears. Once you got over this number, once you lost the embedded reading, and that's why I always look at embedded readings, and when you lose them, it's often a move's going to go to the 18-day average of closes. You did that. This was Thursday, Friday, today. Now the upper Bollinger Band becomes a target and place for the market. So the key is to learn what is an embedded reading, what is a slow stochastic, what are relative strength indices, all the different terms that we use. And we've put together 2 guides to technical indicators with our good friends from Futures Magazine. And what they are is they explain in detail, these are what the articles look like. So they're 2 booklets that we've put together with them, and they're PDFs, by the way. So you can print them out, you can put them together as a booklet, whatever you'd want, read them on your screen. But it teaches the principles of this. And I think that's what's so important in money management, real important. So how do you get this from us? It's simple. Go to our website at www.iraepstein.com. You'll see our free offer section on the bottom right. Click on that. You can click up here if you'd like, and that'll take you right there as well. In other words, when you're watching us here and you see that icon come up on YouTube, click that one. I'm Ira. You have a good day, and I'll see you all tomorrow.